Within mortgage rates, how does interest work, or what is interest?
Interest is going to be what it costs you to make that loan, or get that loan rather. It says, well, it's a percentage of the principal amount every time between when you make a payment and when the next payment comes due. Folks are probably familiar with car loans or student loans, business loans, or even their credit cards. Interest is tacked on there. That's the cost of using money. If you got money, you don't need the interest. But if you need to borrow money, you have to pay the interest just to use that money.
Why do interest rates go up and down?
A myriad of factors go into interest rates as we're seeing right now. Last year we were looking at some 2.5% interest rates, maybe even some threes we thought were just terribly high, and now they're like in the 5.5, which is still not bad. It's not as good as 2 and 3 and 5 or 2 and 3, but again, 5 is not bad compared to the 18 that it was back in the 1980s when I got ready to build my first home. So we are still in a very good interest rate situation. It's just not as good as it was. Mortgage companies take a look at what the mortgage-backed securities folks are going to be paying for the loans they sell to them. It's a lot of factors go into that interest rate. But the thing to do for our folks looking for a home, they need to make sure they're dealing with one of our approved lender partners and not getting taken by those what they think are going to be really, fire sale rates. Because if they're getting fire sale rates, they're having to pay points to buy those rates down. And they might not know about it till the very end when they find the loan documents they're getting ready to sign. I'm paying all these points to buy this rate down? Wow, I didn't know that. So again, it's very important that they use our lending partners.
Can you talk more about what lenders assess when considering the interest rate that you will get?
Well, let's say you came to me, you want to borrow some money from me. I'm going to say, Kristen, you working? Do you have a job that's, have you been there for a little while? You think you're going to be there a little while longer? So they have to take a look at your employment history, make sure that you've got a steady income stream to make sure you can make those payments. And I'd want to know, my goodness, Kristen, you've got this Saks Fifth Avenue card, you got this Macy's card, are you going to be able to pay all those off and still be able to pay for a house? I'm going to take a look at the credit report and see if you've been making those payments on time and see how much that debt is and how much those payments are. And I've got to compare that with, what your car payment is and all the other payments, and then what the proposed principal, interest, taxes, and insurance on the house are going to be. A lender has to make sure it's going to be a successful situation. No lender wants to put you into a house where, oh gosh, we got you in there, and all of a sudden you've gone to the furniture store, you've charged a whole bunch of furniture, and next thing you know, you're upside down. We don't want that to happen. We want to have successful homeowners. That's where a good housing counselor comes into play. They help you budget your funds. But again, we're looking at, employment history, credit history, and your credit score. And hopefully you'll be a low risk situation.